There's still plenty of time. We've got a 60-day window. Clients are thinking about or negotiations with their accountant to set up a self-managed super fund. You need to surround yourself with experts, people that have skin in the game, that can navigate the current environment over the next 2 or 3 years. Often people say, you got to rent best, can't have your dream house. I believe you can have your cake and eat it too if you structure things correctly. Grow the investment portfolio first. That will give you choice 5, 6, 7, 8 years time.
They want their cake and they want to eat it today. Welcome, Chris Raymond, to the Moves to Momentum podcast. Just a humble lad from Penrith, now in the big smoke, director at Unconditional Finance.
Correct. Yes, mate. Appreciate you finally inviting me here and looking forward to chatting to yourself and our audience today, mate.
No, man, thanks for coming in. And what do you mean finally? We spoke and I was like, man, let's get you on the podcast.
No,
I want you on here.
I've been watching from afar. So, mate, love your work. Obviously, we've known each other for many years now. So, looking forward to, going through some topical conversations today and, sort of explaining my situation and, my portfolio and everything else like that. So, mate, pleasure to be on.
I wanted to originally get you on to talk about your property portfolio. You've got a young family, you're building your property portfolio for the last few years and what it looks like to be a high performer in business, but also have your family and property portfolio. Like you've got a lot going on.
Correct.
But there's a very topical thing that I want to talk about first, and that's the changes in SMSF lending, landscape, everything. So it's been... not even 24 hours since that's changed. And what have your clients said? My phone was going off, bing, 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 bing. What have you said to your clients and what have you heard?
Correct. Yeah. I think I mentioned to you out there, mate, that I think we're in a planning session. Steph, my operations manager, just sort of looking, what does the second half of next year look like? And then about sort of midday yesterday, all of a sudden the phone sort of blew up and, a lot of buyers agents, a lot of brokers, a lot of clients started texting me. So I had to obviously pull myself away from that meeting and just see what happened. And I guess, there's a lot on social media about it, but, in short, good old Albanese, everyone's property investment mate, he's done a deal with the Greens to try and pass his, CGT, so capital gains tax changes and negative gearing changes through Parliament. And I think the Greens said through the Senate, the only way they will support that is if you then ban residential investment lending through a self-managed super fund. So, it's just sort of come from left field. We can talk politics all day, but we're not here for that. I'm all for change in terms of if you take something to the public, i.e. an election, this is our proposal, this is what we're thinking, and, let the, electorate decide, but sort of to do the dirty, to get in bed with the Greens, just to get, these initial changes through, that doesn't sit well with me. So, I mean, just to summarise quickly, the Labor government with the Greens are going to be banning residential investment property through an SMSF in about 45 days' time. So legislation is looking like it's going to be passed, I'd say, in the next 1 to 2 weeks. And, your clients, our clients, every client on the street that was thinking about or has an active pre-approval looking to purchase a property through that vehicle, you've got a 45-day window to now sign a contract of sale before that is off the table for good.
Wow.
So, some huge changes. And, I see a lot of commentary on media this morning, the wealthy, they get, attacked again. This vehicle in terms of investing in was not for the wealthy. This is for mum and dads that were traditionally priced out, so they couldn't actually borrow in their personal names, in their personal entities. We used to say to a lot of our clients, mate, if they had a balance inside of their super fund of about 160 to 180,000, we can talk business. And, this is a set and forget strategy. Obviously, they can't access any profits until they reach retirement age. But this is a way those mum and dads, those tradies, those, younger generation type people can get into the market, start to grow a portfolio in the background, and the government and the Greens have said, done. So,
man, there's so much, I know Jamie and I, we bought a property in our super fund. We had maybe about the 180 mark as well. We ended up buying a 4-bedroom, 2-bathroom house in Townsville. This is back in start of 2024 for maybe like 500 grand.
Yes.
I think that thing's worth probably $750 now.
Correct.
And you're thinking that's 2 years we've held that property for, and it's maybe gone up 200, 250 grand in 2 years. Like that's incredible amount of capital gain for anyone. Like I've literally taken 180. I've more than doubled it in a 2.5 year window in regards to raw capital.
Yep.
From using my SMSF.
Correct.
Do you think that the Libs, maybe even Pauline Hanson, the One Nation, they'll come in and just instantly abolish this thing? Or how long do you think it'll stick around for?
So 2 things to that. So on Townsville, actually, myself and my wife, we actually bought 2 properties in our super fund in Townsville. I think about 480. They're worth, $650. So, you could leverage to a certain amount inside of your super fund. So that's why it was an attractive vehicle to invest in. And, would my retail super fund, the industry super funds, the government are obviously tied in with the unions and things like that, would that have performed better than these properties in Townsville?
If that's a question, I don't think so.
That's a no.
Mainly from the leverage even. Like just the leverage alone, no.
Yes.
But like what's it's done, I've checked this stuff regularly. 18% last 12 months. That's what Townsville's done growth-wise.
Correct.
Right. That's if they're offering me that in the super, I'm like, what the hell's going on here? That's incredible.
Correct. Yeah.
Like anything, 8 to 10% is like aggressive.
Correct. Yeah. So our net position is north of $300,000 by buying those properties, even though you took debt out on it. So and the rent covers the repayments and things like that. So that vehicle is going to be taken away soon. So I guess just in summary quickly, mate, if clients are thinking about or they were in negotiations with their accountant to set up a self-managed super fund, do it now. Speak to people like us, speak to your broker, get it done. We have a 60 to 70, or probably a 60-day window now to sign a contract. I know you guys can turn good stock around very quickly. So we can still get you in the market. Your second question there, One Nation Liberals, I think they've gone on public record saying if they get in Parliament, if they get elected in, I think 2 years' time is when the next election is, they will reverse those changes. Wow. Now, I always say to our clients, an investment strategy is not on hope. It's not on what might happen. So we need to look at what is the plan today, what is the plan over the next, 60 days, and then beyond that over the next sort of 18, 24-month period before that election gets called. So, there are options. And the other point is, you can still invest in commercial property as well. So
yes.
Yeah. So
commercial's been doing really well in people's super. And I feel like Resi, when I first heard about buying a property in your SMSF, most people were doing commercial stuff. And then now Resi, I think maybe just after COVID, when the growth had just exploded in a lot of these areas, I think it started to become a lot more popular because people could see the returns.
Correct.
It's like, why wouldn't I do this?
Correct. Yeah. You just got a little bit of a caveat with commercial. I think you need to be, certain, I should say, in terms of who you're going to be working with in that space, because I'm seeing a lot of, what were traditional buyers agents in the residential side all of a sudden offering commercial. Yeah. And commercial, you normally price point to get into commercial property is normally a lot higher as well, mate. So you normally need more funds in your super.
True.
And a lot of those mum and dads that were buying sort of residential assets up to 600,000 or 700,000, they're not going to be able to buy a commercial property sort of sub that amount. So, you are going to wipe out, or the gap is going to get a lot wider between the has.
I know. It feels like that's what it is.
So, I guess, obviously I'm a little bit biased to property in general, but more so safe, effective investing. We've helped over 1,200 clients, mum and dad clients, and I guess, their vehicle of choice was property, doing it responsible and, obviously, investing in super as well.
It's funny you mentioned that before. I honestly spoke to my brother this morning. He called me, bro, what's Albo doing? Blah, blah, blah. Like, just wanted to have a bit of a chat about what's happening.
What did you say?
And I said, it's same old tricks, but it does feel like, and maybe I'm putting my tinfoil hat on here, it feels like they're moving towards this, the World Economic Forum, they spoke about this a few years ago, like, you'll own nothing, you'll be happy about it. And like this real, what is it, like one world currency type of vibe, like that the government will be responsible for a lot of things.
Yeah.
It feels like they're setting that more and more up in the policies and the way they're doing things. I think that's where we're moving to, and to have assets in your name is going to put you in a very strong position.
Correct.
And this world's changing so quickly.
It is.
AI, tech, governments, the amount of stimulus going on in all these major countries. It's crazy.
Yeah, and then I guess the other layer to that is inflation as well. So put your money in the bank, and inflation's growing more, so it's eroding away, your dollar. It's growing at a faster rate than what, the interest rate is in parking it in Commonwealth Bank savings account as well. So, yeah, it is interesting because it looks like anyone that's got aspirations, and it's not, the wealthy guy over there earning $3 million a year that's got a 20 property portfolio. It is the mum and dads. And I think over 60 or 70% of Australians that own an investment property, they own one property only.
Wow.
These are guys, that are working 60-hour weeks. They're tradies, they're mum and dads, they're teachers, they're, police officers. They're just trying to get ahead. And if you're trying to get ahead in the current environment, the government goes whack.
It seems like that, eh?
It's ridiculous. I mean, in the private sector, so in business, in your business, you want to reward people that are aspirational, don't you?
Yeah.
People that work hard. Economy. People that work after hours, people that put in, people that hire people and employ people. You want to reward those people. And that's not a tax dodge or anything like that. A lot of people online you're trying to avoid paying tax. Trust me, the tax you and I pay is probably the equivalent of what, 10 people would pay in their normal PAYG jobs respectively. So, mate, we could talk all day about politics. Yes. I know we're not here.
We're about to talk about you and your property journey.
Correct. So, but yeah, interesting times anyway. So I think, more so than ever, just quickly, mate, you need to surround yourself with experts. People that have been in the game, people that have skin in the game. I've got 20 plus finance years experience. I know you've been in the game for many, many years as well.
Yeah.
Not your Johnny-come-latelys that don't have that experience, that own one investment property. You want a team of experts and professionals that can navigate the current environment over the next 2 or 3 years. And then we'll see what, an election will bring.
On that quickly, before we move on and get into your personal story, how long is it taking for you to get people pre-approved, set up, ready to purchase in their SMSF? Like if this will be out on Monday, the 20-something of June.
Yep.
How quickly can you turn a pre-approval around in their SMSF?
48 hours.
48 hours?
48 hours, yeah. So I guess we have probably done over 100 SMSF loans for our customers in the last 2 years.
Shit.
We know which banks are more friendly towards SMSF lenders in terms of, what they'll allow them to borrow, and I guess the conditions, and obviously their documents being digital and things like that as well. So a client, I was actually driving down to your office, mate, actually rang me up and said, shit, Chris, what's going on? I said, speak to your accountant. There's still plenty of time. We've got a 60-day window, there or thereabouts. So, get your accountant to turn it around, do the rollover. And as soon as I get the SMSF trust name, we can go to work.
Yeah.
48 hours, Jace, market ready, your team do the magic in the background. We can secure a property in a few weeks after that.
I think it's very important for people to do that before July 1, because from what I understand, setting up a trust after July 1 with this new anti-money laundering situation, it's going to be a lot more difficult to get a trust set up. Your accountant has got to go through a lot more hoops than what they used to. So, you're taking 48 hours.
I'm last AML. Well, we've had that as in broker land for years, so it's interesting. I think agents now have to follow anti-money laundering rules,
and also accountants
as well. So just to obviously try and criminals that will obviously try to exploit that loophole, so to speak. So there's a little bit more to it, but mate, I think the big thing at the moment, poor old accountants. I mean, they're making $1 million a year type thing. The amount of changes and advice they're giving to clients. But if you have an accountant that can turn it around in a week, 48 hours later, you're market ready.
Yeah, that's right.
Jason, bang, let's go, mate. Let's go.
But, bro, you've been can you tell us a little bit about, you're a humble lad from Penrith. How did you, get into property investing? Can you tell us a little bit about your personal story?
Yeah, so, born and bred Western Sydney, you would say a blue-collar house, and, mum and dad worked hard. Dad was always sort of a businessman. He tried a little bit of this, a little bit of that. Probably didn't quite work out, but he installed a lot of, I guess, the DNA around, how to run business, how to follow up clients, customer service, the one-on-ones on, what I believe sort of make a good business. So, went to school out there, had a great time, went to public school, didn't go to high school. Went to high school. I didn't go to university after high school. And then I sort of had a choice. I was probably a little bit lost at 18, like most people are. And a lot of my mates started getting trades and, they were earning $100,000 a year at 18, 19, 20. I, for some reason, had something in me that just wanted to learn about money and property. And I always wanted a white-collar job in terms of I wanted to work in a bank or something like that.
Mad.
So, yeah, got my first job at ING, and I think I was earning about $45,000 a year whilst my mates were, third and fourth year tradies.
Yeah.
Mate, they were earning $100,000 a year. So it sort of started from there. So I had a dream. Just, I wanted to work in finance. I wanted to learn about lending. And then sort of around that 21, 22 years of age mark, I started to become interested in property. How do I get out of this rat race a lot sooner than, the traditional person? And work my way through a bank. I never actually worked in Tellerland, so I wasn't customer facing, but I was always in third party. So I always dealt with brokers in the background.
Yep.
I used to do the loan documents to start with. I used to then work in credit. Eventually I became a BDM, so a business development manager looking after brokers. So I guess my grounding when I eventually started my business around 2016, 2017, I'd done the apprenticeship. I knew how to read tax returns.
Yeah.
I knew how to read pay slips. I knew how to structure deals. I mean, it got to a stage, mate, where I was actually coaching my brokers as a bank BDM. Hey, Jason, this is how you should structure the deal. This is how you should read, a tax return and a P&L. So that's the working side. Since then, it started as a one-man band.
Unreal, man.
Like most people.
Yeah.
Just sitting in my bedroom. Started writing loans, and I think my BDM background, so my business development background, there's those that say that would do it, and there's those that actually fucking do it, excuse my language. And I just made a target. I sat there. LinkedIn used to be a lot better to connect with professionals, and I think in the first month I connected with 100 professionals.
Yeah.
Hey, Jason, Chris, Unconditional Finance. I actually lied and said I've been broken for 2 years. Been broken for 2 weeks. But I knew I could back up what I said.
Yeah.
So just doing that activity, sitting in my bedroom, went out there, hustled, met a property group, and I got my first relationship. And I wrote like 60-something million in my first year of business, which is huge.
That's massive now. Yeah. Back then in 2016, that's crazy.
Correct, yeah. And, mate, just to sort of wrap that up, we've grown the business over years. We've got, I think, 12 in the Sydney team now. I've got 12 in the Philippines. And I'm at a stage in the business now where a lot of my juniors, they're now accredited mortgage brokers. Unreal. And they're going to be the next stars of the business. So we want to coach, train, mentor them.
Yeah.
And mate, we're in a good position.
Unreal, man. Like from where you started 10 years ago to where you are now.
Correct.
Very different.
Correct.
And we have learned so many things in regards to business. You would have seen so many changes, for goodness sakes, in the lending space. What's some of did you ever get any death wobbles along the way, or?
I think death wobbles come with hiring staff, because I actually had a very good experience with my first few hires. And that was a little bit of luck to a certain degree. One of my first hires, Joel, mentioned him before on a few different podcasts and stuff like that. He's now running $150 million a year. He was a client in the Navy at 19, then approached me and said, Chris, I want to be a broker.
Yeah, right.
Well, why, mate? I want to get out of the Navy. It's something I've always been interested in. And I think, my biggest take in business is we can train the technical side. You can do the apprenticeship, sit under Chris Raymond. You will be good at what you do in terms of mortgages after 3 or 4 years. But I think the behavioural side, the ticker, the want, that person at work, their hours are 9 to 5, but they're sitting in the office at 6 o'clock. They're taking phone calls. You can't train that. I think that's in there. That's your DNA. And I think around hiring, we've sort of, we've got that wrong a little bit over time, because, the resume looks fantastic.
Yep.
Jason's worked at a bank. He's worked at a brokerage before.
Bring him in.
98% of the times they're shit.
Yeah.
So how do we get the person that has the dog in them? We had a scaffolder. He's brilliant in terms of a scaffolder. Want, Chris, I want to know about property, finance, lending, numbers. You can train them.
Yeah.
If they have the want, the desire to learn, and put in the extra 1%.
I love it.
That's the key.
I find that in the buyer's agent space too. Like that, I have done a couple of hires that technically know a lot about structuring property portfolios.
Yes.
Understand what a good deal is, and then you put them on the phone to a real estate agent, and the real estate agent just freaking rolls them over, man. Like they're just bowled over, and they can't keep up with the real estate agent. you need to keep up with the real estate agent because that's where you're going to build your relationship. And that's what I've really admired about you in your business. You're a relationship first type of guy. That's us. Like, we're relationship first. It's one of our values. We got it up on the wall here. And it's like, that's how we want to be with our clients in our business partnerships, like just relationship first, not deal first, not money first, relationship first. Because I think that kind of like ends up being the long game and stands the test of time other than one deal or this or that.
Yeah, we're the same. You know, I always say to my team, especially the younger ones, because they haven't experienced life, this is the biggest financial decision that any client's going to make. You know, they are stressing out. You know, if they are coming to us asking, hey, Jason, you know, where's my loan up to? We failed in our job, in my opinion. So put yourself there in the living room going, I haven't heard from Chris for 2 days. Just a quick text, hey, Jason, we're on it. We're going to hear back from the bank this afternoon. That's the biggest thing.
Doesn't take much.
It doesn't take much. And I think the other thing, mate, is know your client. Don't be afraid to say no to deals.
Yep.
And I know when you're starting in business, you're like, shit, we'll do it all. You know, bring it on, you know, the dirty deal that the broker down the road couldn't do, you know, give me the challenge. And, you know, we are known for doing more technical, complex loans, but we're known to also saying, you know, sorry, Jason, it's not a deal for us.
Yeah.
So work with your ideal client, work with your ideal niche. And I think that's sort of been the biggest learning curve, you know, and I'm trying to pass that on to the younger guys in the office as well.
I think that's like, can you tell us who is your ideal client? Because you at the start of the episode, you're talking about like understanding your team, and we're really nailing that at the moment. You've met my marketing manager a few times now, but my marketing manager, my ops manager, and also the Jordan, our discovery call consultant, we talk about our ideal client. We named him Steve, but Steve is 40-ish, late 30s, early 40s. He either has a business that he's been running for the last five plus years, or he's like quite high up in his career. And there's maybe 5 clients that Steve kind of morphs into, but they're all parents. They're all dads. They all like are in committed, strong relationships. They all really love their kids. And they talk about spending time with their kids a lot. It's like, oh, I want to give back to my kids. I want to set my kids up. I want to do this so I'm not working so much so I can spend more time with my kids. So it's like that seems to be a thing. And they all seem to have like had some type of sporting background. They all like kind of excelled in sports when they were younger. And I think that has built the dog in them. So they got the dog in them, but they're still like good family men. That seems to be our target market. Who's yours?
Correct. Yeah. I mean, traditionally, like not that we, like me personally, I've never navigated towards first-home buyers. I mean, first-home buyers are brilliant. We've actually got a broker that actually niches in that now. So he does all the first-home buyers. But ideally, you know, even young people, young, ambitious people that say, Chris, I want to create wealth through property. I don't want one property. I want to map out a multi-property portfolio strategy. We get a lot of business in that sort of 21 to sort of 35 range with those type of clients. We also get a lot of business people as well. You know, we can read trust returns, tax returns. You know, I've got 3 personal trust entities myself, SMSF. So we're very good in terms of reading complex tax structures, working with their accountant, the self-employed person, and mapping out a strategy for them. And I guess our next level of client is, you know, mum and dads, like you said, kids. You know, I find I've got 2 kids myself, a boy 6 and a boy 4. Anytime a customer says they have kids, like that is almost, we almost get an instant connection. And I always say, Jace, how old are your kids? You know, 7 and 5. Shit, mine are 6 and 4. How's it going? You know, we always there's always a nervous laugh when you say, how's it going? Because, you know, parenthood is hard in general.
It is, man.
But there's that connection. Chris is a family man. He's growing a business. We're in a similar position as well. We trust him with his advice. So, yeah, we don't want to be all things to everyone, but I'd say between, you know, that 20 to 35 and then that sort of 30 to sort of 45 range, your mum and dad, your professional type clients.
Those are 2 type of people. It is funny. Like I'm a big believer in you want to be taking advice or guidance from someone who's got the been there, done that experience. And since becoming a dad, the dad card or the like in a committed relationship with kids, I almost don't want to hear any advice from someone who isn't in that. Because the perspective of I've been up all night with a crying baby, with a wife who's got the shits at me because we're both so tired, and you still are able to show up, give a high level of service and care for your clients in that, it tells you something about the person.
It does, yeah. They're more understanding.
Yeah.
Like if I predominantly work in the office 4 days a week, but that one day, you know, kids come home at 3:00. Chris has an appointment at 4:00. I've locked the office bedroom. They're banging at the door, and that parent can hear it, and they just laugh.
Yeah,
they accept it. We understand, Chris.
Man, all good.
You know, it's a madhouse at our house as well, so it's a lot more acceptable. And I guess that's just that connection at the start. Chris is a family man. You know, Jason's a family man. We trust them, and it does build that rapport almost instantly. So yeah, big believer in that.
What about your beloved, bro? Your missus? Because you're talking about like young Thundercat. You know, you just like you come out of the banks, you're writing 60 million in your first year, just with a couple of LinkedIn DMs. Your missus has been on the journey with you the whole time.
She is, yeah. So and just I guess in the broking network, so we've got a 6 and a 4-year-old, and it's not a poor us story, but yeah, my oldest has autism as well, level 3 autism, which, you know, parents out there that, you know, have a child with autism, non-verbal, in nappy still.
Yeah.
A lot of challenges, a lot of therapies, a lot of things that go into that as well. So, and often people say to me, how do you actually do it? So
that's impressive, man.
Yeah. And I always say, you know, my success is her success, you know, it's not me, Chris Raymond, up here getting this award or getting these accolades. It's the work that she does, and I try and be as actively involved with the kids as possible. I don't disappear. You know, I drop the kids off normally once or twice a week to work. I'm very disciplined with my time, but I guess the work, I won't call it work, but I guess what she does in terms of picking up the kids and doing all that sort of, you know, 3:00 to 5:00 work whilst I'm in the office still working, that contributes to our success, you know, as a family as well. It's not I work, you don't work. It's not like that in our household. But yeah, the wife is the rock because she can see, you know, I think all businessmen, mate, like, you know, it looks pretty on the outside. Mate, there's been nights, you know, I come home, I fucking cry. Like, it's like, there's a lot. You got clients about to lose their deposit. You've got business decisions. You've got to let staff go. You've got to fire someone. You know, you've got to look at your budgeting. You've got to, there's so many different things that come into business. And, you know, my wife often says, you make it look so easy. Mate, I am stressing out on the inside. Maybe I make it look easy to my family, but there's a lot to that. But what she contributes to the family allows me to do what I do best with work. So,
how long have you guys been together for?
I should know this. She'll probably know me for this. We've been married for 9 years, been together 13.
Very nice.
Met her in the bank.
Office romance.
Office romance.
Bro, my missus will work too.
Yeah. So, but yeah, I mean, there's challenges, you know, people that hyper-focused with business, and I get hyper-focused with things, whether it's investing, whether it's business, whether it's sport, whether it's, you know, whatever we do, you know, there's you've got to balance your time because it can't all just be about work, even everything you're doing for work, for your family, for your kids. You know, anyone that runs a business would probably understand, you know, what we're saying.
Yeah.
So you definitely have to look at your time and, you know, how do I spend more time with the kids and how do I, you know, show up more for my wife and all that kind of stuff as well. It's not just business. So you get it.
I try and I heard this quote once, and it's like, if you put as much time and effort into auditing your business in your marriage, it's like, what would your marriage be? Yeah. And that, bro, that humbles me all the time because every morning I come in, I do a cool, who do we sign up this week? Who do we do deals for this week? Like, where's everything at? Like, you do kind of like just a quick sweep of how's the business health going in regards to new client sign-ons, to customer service, to customer expectations. Bro, how often do we do that in our marriage, man?
That's a good point. Yeah. So we're always looking at our business. And I guess being in numbers, I just did a 12-month forecast, you know. Worst case scenario, Albo's got his hands on my business, you know, obviously volume's coming down. You know, what I stress tested my business. I know a lot of tradies that don't do that well, but, you know, when do we do that at home? So, yeah. And sorry, mate, you go on?
I feel like so many times I say to Jamie Lee, like, I feel like a lot this year I've said it. I'm so sorry I've taken you for granted, you know? I've taken you for granted that you're here, you're supporting me, you push me.
Yeah.
And I haven't given back.
Correct.
Bro, I feel like a dog.
Yeah. But how do you do that? You know, and I guess someone said to me once, you need to spend money to buy your time back. And what I mean by that is you've got to start to scale a business to a certain size, because it was Jason at the start, Jason ringing agents, Jason signing contracts, Jason chasing conveyances. Chris Raymond was doing that as well. So you need to build a business, scale a business to a certain size, whatever your why, whatever your want is, so it allows you to buy some of your time back. So then you have more time with the family, the kids. You're not doing the 15-hour days, still doing 9 on 10, but it's not the 15.
How often do you guys speak about that? And does your property portfolio fit in that conversation?
It's an interesting one. I probably don't share enough. We're being very honest in camera here because, I guess I'm so up during the day, and that's a fault of mine. When I say up, because you're up for your clients, you're in interviews, you're speaking to, referral partners, you're speaking to your team, like managing a team's another family outside of your family. So it's probably not something I share naturally. It doesn't come naturally. I've had a hard day, babe, or, I'm struggling a little bit here. I try and be very disciplined with my time, and, I go to the gym at 5 a.m. 3 or 4 days a week. That's Chris Raymond time. Yeah. And that allows me to sort of, revitalize my mind, so to speak. Have my coffee, have my steam. I'm back home at 6:30, and the rugrats are getting up. The wife's getting up as well. So whilst I probably don't share it enough, I try and build discipline into my mornings and my day that allows me to have more time with them at home.
That's good.
So,
and you guys, when did you start your portfolio? You guys have, how many properties you got now?
We've got 14. It doesn't sit naturally for me to share that, but I'm
pushing you a bit here.
No, 100%. No, I'm happy, but it's probably taken me a year or two. So I've always been quite humble in the background. Blue collar worker, not on here saying, just bought me 6 property, blah 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 blah. But we want to share our story a little bit more with our clients, and we've always shared it internally with our customers. But they want to know that the guy or the team they're working with has walked the walk, has built the strategies that they're looking to build, has set up the entities that they're looking to build as well. So, mate, just over time, I think I bought my first property. As I said, I was always interested in my early 20s and bought a unit in Adelaide for $200,000.
Yeah, nice.
Around 24.
Yep.
And then I probably didn't start buying again until about 30. I sort of traveled, I did the London thing and lived over there for a few years and spent money that I didn't have. And then sort of around from 30, for the last 10 years, we've accumulated, and in particular, the last sort of 4, 5, 6 years. I guess the good thing about a business, if you can get it to a certain stage and you're responsible with your money, you can then start to tip some of those profits back into whether it's property or other sort of assets that you feel are going to grow over time. So, we've built that out. We bought the white picket fence as well. So often people say, you got to rent best, or, you can't have your dream house. I believe you can have your cake and eat it too if you structure things correctly.
Agree.
Grow the investment portfolio first.
Yep.
That will give you choice 5, 6, 7, 8 years time. So
I think people want their cake and they want to eat it today. I think everyone wants to buy the white picket fence today and then also build a property portfolio today. But it's like, if you do it in the right sequence, and I think the sequence is very important.
That's okay.
Is like you can have them both.
That's the key. Yeah, we have conversations. Often there's a bias from one partner to normally have a white picket fence and the shiny house. But I say let's get on a Zoom together. Let's get on a joint phone call together. Let's map it out and show you what it actually looks like. And I guess delayed gratification. Yeah. I know everyone wants everything now. They want a nest and they want to have, that nice shiny toy. But, if we can map this out in the right way, that non-deductible debt in 5 or 10 years' time is going to be very minimal. And then you can have the shiny house as well. So, again, it's all about strategy. It's all about sort of understanding clients' goals. And I think we articulate that very well with our customers.
Man, you mentioned something there. How often do you have that conversation? Because I feel like I have it a lot, man, of, we're going to have a kid soon, or we're planning to have a kid, so we're just going to get into the market now. And you're like, you guys are buying this type of asset. Where do you want to be? Oh, this is all we can afford, but we want to be here. Like this, for me around here, like let's say like a $2.5 million house in Gymea Bay, Caringbah South.
Yes.
It's like, but you guys are buying a 3x1 small villa at the back of Caringbah.
Yeah.
Because that's all you can afford now.
Correct.
And it's like they just are told, or they want to just get something now to like kind of like soothe this vulnerability sore or whatever that they haven't done something yet.
Yes.
And more, man, I'm hearing it from like people in their early 30s, late 20s. It's like, oh shit, we need to do something now.
Correct. Yeah. People, well, mate, this is every day. That's what we do.
Every day.
Yeah, well, it is. Yeah.
And what do you say to them?
Well, it depends on their circumstances, of course.
Can you couple X, the most common couple you talk to that's in their mid-20s, let's say, mid-20s, late 20s, that have got this situation? How much are they on? What are they making? How much cash have they got?
Yeah.
And what advice do you give them?
I think a typical household probably on average would be earning about, 160 to 180 combined household income. Mm-hmm. So what will that allow you to buy, first of all? So where are you? In Sydney?
Yeah.
Roughly banks will lend 5 or 6 times annual income.
Okay.
So, you're probably looking at a $900,000 loan. Will that get you into carrying bar? Nah. Or will it give you a little unit or something like that?
It'll give you a little unit, yes.
In pre-budget changes, negative gearing was not on the owner-occupied home. That still stands, but you could negative gear, obviously, your investment properties as well. So we then model out what does it look like in terms of, cash flow. If we bought 3 or 4 properties that grew at 10% compared to this property in carrying bar at 10%, what does that then look like in 10 years? And then try and give them some real raw data numbers around that, because basically once you buy that PPOR, so the principal place of residence, your money's gone. Your repayments are, respectfully, your repayments are $4,000 a month.
Yeah.
What can you save?
Nothing.
And your house is not an asset that's going to help you retire early or create wealth for your family. You need to eventually leverage equity from that, or we build the portfolio first.
Yeah.
So, there's little caveats to that. Like
how much are people saving normally? Because just like $4,000 a month repayments, right? I hear what people are saving, but just for the people along there to maybe feel some comfort or like to have a bit of a benchmark, what is that average couple X? What are they saving per month?
I would say on average they would have, in terms of what do they have in savings to cover
What do they have in savings and how much are they saving per month?
Often they have anywhere between $10,000.
Yeah.
Can't do anything there.
No.
All the way. We normally say for investor clients, you want a minimum balance of 60 to 70.
Yes.
10% deposit, 12% deposit, your stamp duty, your costs, your legals, obviously BA fee, that's your starting point. There are exceptions to the rule. Chris, I've only got $30,000. Do we potentially look to get them in under the first home guarantee scheme in a unit?
Yep.
5% deposit, and people are saying, there should be a God-given right to own a property. That's not how it works. You need to show a little bit of sacrifice. If you can't save $30,000 to $40,000 in your personal circumstances to get you into a market with that 5% deposit scheme, and then, live in it for 12 months and then we flip that to an investment, that's a strategy we look at as well. So, I'd say investment 60 to 70.
60 to 70 grand.
60 to 70 and first home buyer, again, not the preferred strategy, but on certain occasions, I'd say $40,000.
Yeah. And how much should that person, it's like, oh yeah, I'm saving X amount per month. Oh, that's me. How much should they be saving per month? Squirreling away.
Well, I guess what we do a lot of modeling as well. So we would look at, I'm a big believer in, not a client today, but a client tomorrow. And what I mean by that is, Jason, you can't do anything today. I think once people see that it's tangible,
yes.
Chris has mapped out a plan, we need $90,000 or $80,000. We're at $60,000. We can save, $1,000 a week combined. Well, we're 30 weeks off. And often we will give them advice on, let's clear your bad debt. Let's clear that bloody credit card. That's draining you. Let's clear that car loan that's sitting at 15%. Let's clear that bloody, charge card or help debt or whatever it may be. So we look to get rid of those high interest rate loans. My savings are going to go down. But if you do that, that's going to allow us to, instead of saving $1,000 a week, we can save $2,000 a week. So we look at that as well. So I think, if it's tangible, we get it all the time, mate. So a client came back, Chris, spoke to us 10 months ago.
We're ready.
We've got 90 grand.
Yeah. That
plan you put us on. And the gratitude, like when you do eventually get them at home, mate, you sometimes forget your why. Why did you get into Why did you get into home loans and, trying to help people? Mate, that single mom or that couple that's got a kid, you put them on a savings plan, they get that property. They call you up, you've got a property, mate. It's tears of joy.
Yeah.
And you forget sometimes that, there's a human element there. And that is my why. That's our why. That's, helping that person.
I love it, eh?
So
for me, it's the text message, 6 months after settlement. Hey, just got a bank val done. We're up 15%, 10%, whatever. And you're like, that's real life-changing money for them.
It is.
I keep coming back to this because I am trying to, with my questions, paint the picture for people listening of what the experience would be like. For me, I think the best thing that you do is the modeling, right? And that's when we're on the Zoom call with the clients, eh?
Correct.
Because I think that is so powerful when they sit there and they can, that's always what's so difficult for a lot of people. They can't see it. And when it's modeled out in front of you, you do A, B, C, and then in the future you can get D, whatever, that is the power of talking to someone with experience that understands, if you do this, this is where we can be soon.
Yep.
So I really like that, man. You mentioned something before. Before I move on to the industry, I want to delve back into your personal story for a minute. You said that when you turned 30 or in your early 30s, that's when you guys got serious about property investing.
Correct.
What happened? What changed that you're like, all right, cool, we're going all in on this?
Correct, yeah. I started earning money again.
Yeah.
Well, in my late 20s, I lived in London for 2 years.
Yeah.
So I actually worked for a mortgage broking company over there. But just decided, obviously it's time to come home and got a BDM job. I think I mentioned that before, mate, with a bank, and started to earn bank. And, I think it was number 1 or 2 nationally, in a major. I won't mention their names, but, hard, what do they say? Hard work. Hustle beats talent, sorry. It's my favourite saying. Tommy Panos, shout out to you. So my first day of broking, I went to a broker course and he was up on stage and I stuck it on my bloody wall. Hustle beats talent when talent won't hustle. I'm not the best presenter. I'm not the best,
You're all right.
I'm going okay today. But there's people better than me, but they're not going to outwork me.
Yeah.
And mate, that was my motto when I started at the bank, BDMing.
Yeah.
That was, I'm going to knock on so many brokers' doors. And, the more you knock, or LinkedIn or Instagram, people don't do the activities. Shit, it's quiet. Mate, I used to send out 100 LinkedIn invites. Now it's Instagram. 100, I think we connected on LinkedIn a few years back again. So, and then you do that, 10 people say, yep, you have 5 coffees, you get 2 relationships where you connect with people and then you're getting a referral relationship. So, started earning money, mate. And then, I always just believed in property. So, I didn't want to park my money in a bank. I did, I wear $20 T-shirts. People say, what do you drive, Chris? Got to be a Porsche, Ferrari, BMW.
What are you driving?
We've got 2 Mazdas.
Yeah.
Not 1, but 2. So that's just I'm not a watch man. Got my Apple Watch there. My why is trying to set up my family. I didn't have a family at the time, but I wanted choice in life. In my 40s, in my 50s, if I want to go on a nice holiday, if I want to go on a nice dinner, nothing beats rewarding your parents. I love taking them out to a nice dinner to say thank you. Your hard work, what you instilled in me is sort of where I am today. And, mate, we just accumulated. So, property 1 or 2 went up, got your valuation, put out 100 grand equity. Property 3, probably the first 3 or 4 before I got into broking, it was more in our personal names. And then I got a lot more sort of educated around how do we structure my debt in the correct way? Yeah. How do we map out property 5, 6, 7, 8, 9 in the correct entities to, continue moving forward and not be, hamstrung by the bank saying, no, we won't lend you any more money.
It's funny. I hear that's exactly what I did. I did the first 4 in the personal name just because I was excited, eager, and I could just see, bang, 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 and then you're like, there's guys that have got like way more than me. How are they doing it?
Correct.
Okay, cool. And then you start talking to them, you're like, oh, okay, that's how you're structuring it. And at the start, $1 meant a lot to me.
Correct.
But then when you start investing, you're like, it's no longer about how do I preserve this dollar. It's I've got this situation over here that I don't know how to grow dollars. Oh, okay, so I'm not trying to protect them anymore. I'm trying to grow them.
Correct.
And that shift for me, that's what I was like trying to find out from you. What was the shift? In the 30s?
Mate, I think just surrounding myself with people. Mate, I love reading, education. I'm on online forums. I hover. Knowledge is power.
Yes.
Like literally. So if I can name a policy, who does this, 1 year's financials 90%, I can go bang.
Yeah.
Clients want to deal with me. And it was the same with property. I was looking at people going, how do they grow their portfolios? Yeah. How do they make, what's this trust stuff they talk about? And I picked my poor bloody accountant. I was picking his brains and, what's this, what's that? And so I just learned. You ask questions, you surround yourself, with people that have actually done it. you start to obviously, this works. Yeah. This actually works. And, we live and breathe that. And I'd say the last 5 or 6 years, like I think I bought 4 properties in Melbourne in the last sort of 15 months. Sort of went all in down there. Yeah. And again, Melbourne's a longer term play. Yeah. But, we're not here for, it's not a flipping strategy. This is something I want to pass on to my kids. Yep. Obviously, one of them has a disability. He may not work. I want something for him. In his future, mate, and that's why we do it.
Honestly, that's a big part of why I've loved reconnecting with you and kind of like getting around you, because like that is, you're doing it not for yourself, you're doing it for your kids, you're doing it for your family, and you're going pretty hard, man. You're going pretty hard. But can you tell me that I reckon I could talk to you. I've got so many questions here. What have you seen in I'm going to lump them together.
Yep.
Finance and buyer's agent space. How much has it changed? You've been in this industry now for 10 years.
Yep.
How much have you seen it change in the last 5?
We'll start the BA space.
We'll start there?
We'll start there, mate. Okay. Yeah. I bought my first 5 or 6 properties myself, research. I had a unit in Perth. We flew over to Perth. That first unit I mentioned in Adelaide, we flew over to bloody Adelaide. Like, that's how I did it.
Yeah.
So, I'm on the ground looking. I had no idea. Realestate.com.au, I think, was my best friend. So, So buyer's agents, my last 5 properties have been through buyer's agents. I am a big believer in a BA as long as they know what they're doing. So as long as they have experience. There's a lot of, I guess it's a low entry point to get in. Bit similar to broking.
Yeah.
So you need to know who you're working with. And I always say to clients, speak to Jason and the team. Jason's got 10, 15 years experience in this space.
Yeah.
There is a role for buyer's agents. So that's one part. So
how have you seen it change the property landscape, or even like just the industry in general, like for broking?
For broking, it's been good. Like, we've always been investor friendly. So, we've obviously teamed up with yourself and a couple of the BAs that specialize in certain areas of markets. And, it's been a really good sort of business relationship and cross-referral relationship as well, mate. We obviously send a lot of our clients to BAs as well. I believe in it.
Yeah.
If I'm doing it, if I'm getting Jason to buy my properties, Mr. Client, why aren't you? So that's been big. I guess there was a recent case, we won't mention the name, with a big buyer's agent that went into liquidation. So that was, I think it was a one-off. I think those big buyer's agents, nothing wrong with them, but I do question, do they still have the customer focus at heart? They say they do, but when they're doing 50, 100 deals a month, is it more just a sale?
Yeah.
Or is it, Jason, I understand your family. I know your kids' names. I know your strategy. I know what we want to map out over the next 5 years. Is it that personalised service? That's probably the biggest thing. Education as well. I think BAs have been really good and sort of pioneers to a certain degree with giving information on social media. So that's one part of it.
I agree, man. Like my feed is just full of that, like just BAs talking about, and it's like there's like a lot of these BAs. Some of them argue with each other. But it's like when you strip back what they're talking about the same thing.
They are.
And the data is pretty much the same. You want to be buying in areas that have got a constricting supply, increased demand. Like the fundamentals. You can't argue with that.
Yeah.
Some like other areas other than others, but like some people shit on Townsville, Townsville, I bought multiple properties for myself in Townsville. And it's done well.
Mate.
Some people shit on the unit markets. Man.
Yeah.
And like there's units that I've seen double, if not more, in the last few years. I think what are we doing all this for?
Yeah,
it's capital growth.
It's interesting, because me personally, we bought 2 houses in Perth 2 years ago. People said, "Oh, you missed the Perth market," but I was very strategic with my brief. I knew where I wanted to buy within a certain radius to the CBD. $750 a pop, worth 1.1.
Happy days.
So $700,000 capital growth. And that's with a modest valuation. That's not your old CBA valuation. That's a general valuation, market value, realestate.com. Timing the market, knowing certain areas. There's markets within the markets. And just because one BA, does this strategy, not to say that strategy doesn't work. So,
I've got mates that are still buying stuff in Sydney. Like primo stuff in Sydney, giving it a bit of a spruce up, selling it on, like just flipping stuff, and they're making money. Like a lot. There's so many ways to skin a cat in this game.
Correct.
But what what do you resonate with the most, I think is, but similar to what you were talking about, like all of us buyers agents, man, we all do the same thing, to be honest. We've got a couple of connections in some areas. We're buying some properties for you. Who do you connect with the most? I feel like is more of the thing.
Yeah.
Maybe I'm a bit crazy.
No. I guess our philosophy is, I guess it's my belief system, that we like to work with people like yourself and one or two others that are more, not boutique-ish, but you're not that sausage factory. If they want to speak to Jason, the owner,
call me, bro.
You'll pick the phone up.
Yeah, that's right.
So that's sort of my belief system. It works well. Our clients trust our advice. Who would you recommend, Chris? We'll speak to these guys.
Yeah.
There's a role with BAs. I think the market, just quickly, mate, on that point, I think given all the budget changes, it's going to get rid of the, I won't say shit, but, the smaller players. And it's like that in my world as well. The guys that aren't.
You won't say shit, but you'll imply it.
But I'll imply it. But you know what I mean? The smaller players that don't have a customer base, they're not relationship focused. They don't have, relationships with brokers and the like. They're the ones, I think, over the next 12, 18-month period that are going to sort of probably leave the market. Same as real estate. That's my philosophy. So I think once, who knows if we get a new government, but I think once sentiment picks up 12, 18 months' time, there's going to be an opportunity for the established players to grow even more.
I think so too. Before we wrap, I just want to ask you, what are some of the, give me one, give me two, give me three challenges, things that your clients are coming to you every day, every week, asking you, can you give me some guidance? Can you give me some advice? What should I do?
Yes. I mean, in my world, quickly, I say to my guys, my junior guys, they've never had it easier in terms of, the amount of technology now. There's a platform called Quickly that basically does all the serviceability, all the policies with all the different banks. Like, we never had that. We were going through paper and going through PDFs, trying to find which bank does this. And so in terms of speed to market and getting a result out to clients, it's never been easier. Compliance in our world, it's tenfold now. So, and that's good because it gets rid of the, SHIT. Maybe I need shirts made up. In terms of customers, biggest thing, they're more educated.
The clients are more educated.
And I think that's all the social media and, and I think also respectfully, a lot of clients that work with BAs come to us and said, my BA needs this structure and it needs to be done that way. And I'm like, well, no, it should be done this way. And, we're the experts in finance.
Yeah. Can you unpack that quickly? Because that is, I was hoping you were going to get there.
Yeah.
That's probably one of the biggest ones.
Yeah.
I think you can't paint everyone with the same brush.
No.
But a property investor who is on, let's say, 200 plus.
Yeah.
They got 150 grand cash and they want to start building a property portfolio.
Yeah.
What do they do? How should they structure that?
Yeah. Well, previously it's changed a little bit. So like we used to look at, obviously high income tax earner. Is there a way we can negative gear some of that, taxable income to start with? We're not for negative geared properties. We're not talking new builds, but when you take into account obviously the rent and the expenses associated with the property, there is a shortfall in the current higher interest rate environment. So we used to map it out that way. That particular scenario, mate, 150K, you'd be saying LMI, use LMI, lender's mortgage insurance.
Yeah.
Oh, I don't want to pay it. Look at it as a vehicle that's going to help you create wealth.
Are they buying it in their personal name? Are they buying in a company? Are they buying in a trust? Well, how are they buying this?
Day one, I'll be going trust now.
Yeah.
We've done some modeling. I'm not an accountant. Seek advice, company versus trust. Company, your money's caught up in the company. The company tax rate is slightly lower. But if you ever were to pull out for another project, you would then pay a higher tax rate. So I still think I've done some modeling with an actual accountant. I've got a calculator which we can run through clients with.
Nice.
Trust still comes in slightly ahead.
Nice.
So I would be looking almost immediately. There's no point buying property in your personal names anymore unless there's a land tax sort of play. Let's build a portfolio from day one with a trust. But I guess, back on just quickly, mate, on the advice around buyer's agents, we used to have clients that had 300,000-400,000 in the BA, inexperienced, own very little property themselves. Let's just put that at 90%, pay mortgage insurance. These guys have capital. These guys have equity. Why don't we get them on a lower rate? Avoid mortgage insurance to start with. We're the experts in finance. And then we've always got the lever to pull further equity out later. And it was always, we used to have arguments all the time with a certain BA. We no longer work with them. You stick to your lane, you give advice on property. We are the experts in terms of finance.
I think I can already hear the chat from the BA, but some people want to go hard, right? And I think you can and you should if you want to.
Correct.
But the sequence of how you go hard is very, very important. And I think I tried to go hard early on, and with inexperience for my own deals.
Yeah.
I was just like, bang, bang, bang. I could get a loan quickly in my personal name, and that's what I did. And that was good because it kind of got me on the path. But if you've got good guidance from people who've been there, done that experience, I'm now unraveling the shit that I done in my personal name to try and keep building my portfolio now. But
we've had clients do that. Yeah. Like I always say to you, like all our clients, the key in all of this, we still need the borrowing capacity in the future to pull out equity, and we still need the borrowing capacity to buy another property.
Yeah.
I don't care if your property you bought it for $1 million, it's worth $5 million. If you don't have the borrowing capacity, so if you don't have the right plan and strategy in place, could be worth $10 million. You can't get the equity out. You can't keep moving forward. So we've actually had a couple of clients, probably not ideal, but they came to us too late.
Yeah.
4 or 5, 6 properties in their personal name. They're actually unraveling it, setting up trust, paying full market stamp duty to get it back into a company or trust entity to then obviously allow us to potentially, protect that borrowing power for future purchases. So
when you say
expensive.
When you say company or trust entity, like I feel like we could do another episode just on all of this stuff, right? Maybe I won't go into that because there's so much depth on it. Like you said that.
We'll do it again.
And I understand what you're saying.
Yes.
But it's like
for the mum and dads.
For the mum and dad, that there's a lot of context. And we talk strategy and structuring.
Yes.
And then there's like 1,000 bullet points underneath that that is not applicable to everyone.
Correct.
It's like, okay, that's applicable for this person, that's not for this. And it's how do you get to its experience and context from seeing hundreds of property investors be like, that applies to you, that doesn't apply to you, you should do that, you shouldn't do that.
Yeah.
And you hear from these influencers? What
well, they call them finfluencers. So I guess people online.
They just painted the everyone was saying brush.
They're not qualified to give tax advice. They're not qualified to give mortgage advice or credit advice. Yeah. Oh, I saw so-and-so do it. So everyone's circumstances are different. Yeah. So, like me personally, I've settled over $2 billion, worth of lending. I think for the business around $3.5 billion. We probably helped over 1,500 clients. We've seen most scenarios. So, listen to your team of experts. Yeah. i.e. the qualified broker, the qualified accountant, the qualified financial advisor if you need it, the qualified BA as well. And, we can we'll map out a plan tailored to your situation.
It needs to be a cohesive team, right? And each team member needs to respect the strengths. Man, I used to play a bit of soccer.
Yeah.
I'm by no means a striker, bro. You put the ball in front of me and I need some time. But I got a bit of dog about me. You put me centre back and I'll just charge, knock over people, stop balls, whatever.
Yeah.
That's my place. The striker's not coming back trying to stop people.
Yes.
And I'm not trying to get up there and score goals.
Yep.
But any more challenges? Anything else you want to kind of share with us before we wrap?
I think it's tricky times. I mean, when government change policy, like you map out strategies on current tax rates, current, tax benefits and advantages and different entities and stuff like that. And when it's a bit of I'll call it a rug pull, you need more so than ever. I think the next 12, 18 months is going to be a little bit rocky in terms of, you got to surround yourself with the right people, which we keep harping on as well. Yeah. So, but I think longer term, you still need to look at the fundamentals with property.
Yeah, bro.
They're building about 130,000 homes a year. They're still bringing 500,000 people into the country each and every year. It's supply and demand. Yeah. Are you holding this property for 2 years or are we holding this for 10 years? Yeah. Is the property going to be worth more in 10 years?
Yes.
The right asset, the right area, the right location, which you guys do more than 2 years. So look at it long term. The strategy remains the same. We had COVID, we had global financial crisis. We had, there's always ups and downs. Interest rates go up, interest rates go down. So just forget all the noise. Work with your team of professionals. Look at that 10-year horizon. Will it be worth more then than today?
But that's like when you ask yourself that question.
Yeah.
And sometimes people say that to me as well. It's like, are you going to be better off from doing this?
Yeah.
Yes. Are you going to be worse off from doing this? That's a very binary question.
Yes.
But sometimes it clears things up. Are there going to be struggles in both the yes and the no?
Yep.
Fuck, there is. So what do you do?
Correct.
You may as well do something get you better off later.
Correct. Yeah. And just finally, mate, I mean, I always say to clients, we will show you how to invest responsibly. So it's all good to say, your borrowing capacity is $1 million, but we will show you how to obviously, build in buffers, any negative cash flow, how can we sort of navigate that? And, over the next 2-year period, what do we need to do to sort of navigate the changing landscape as well? So yes, invest, but do it responsibly. That's what we do.
Love it. Chris Raymond, thank you so much for coming out. Moves to Momentum podcast. Man, you've settled billions of dollars in loans. So much experience. You've got personal experience as well. And man, the thing I respect about you the most, family man, you got 2 kids that you're doing it all for. Thank you for coming in.
Brilliant, mate. Thank you.
Thanks so much for listening to the Moves to Momentum podcast. If you got any value out of this episode, please give us a like or subscribe. Or if you think this is relevant to any one of your friends or family, please flick it to them so they can have a listen.